This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. President Trump formally signing proclamations on 25% steel and aluminium tariffs and saying cars and chips may be next. Australia's Prime Minister says Trump will consider exempting its exports. Asian stocks are set to catch a tailwind from Wall Street as traders brush off Trump's latest tariffs, focus switching back to the Fed ahead of US inflation numbers and Jay Powell's visit to Capitol Hill. Plus, OpenAI rejecting a $97 billion takeover bid led by Elon Musk, who says he wants to return it to being a force for good.
Tech stocks, semiconductor names, some of those sectors that we'll be watching today, but of course miners as well. We heard from the president that tariffs on metals could go higher. A U.S. official now saying that and aluminum tariffs will kick in on March 4th. We have already seen prices for aluminum and copper in the U.S. spiking. Take a look at Nikkei futures now to the downside of 0.2% as we're watching those automakers, of course, exposed to really the Mexican market, Canadian market, and of course China as well. The Japanese yen holding at that 151 level against the U.S. dollar, pressured overnight after we saw the dollar strengthening. Currency trading has become more active and actually increasingly profitable because of volatility, especially after President Trump's re-election. We have seen 4 weeks of gains already for the Japanese yen, but we're reversing some of that strength now that we're seeing more risk of sentiment around tariffs as well, around the impact of potentially on the global economy. The offshore yuan holding steady right now as the ASX 200 is also not doing much. We heard from President Trump that an Australia exemption could be considered when it comes to those tariffs. Take a look at how U.S. futures are setting up after they rebounded in the overnight session led by technology. Materials producers, materials of course in focus given the tariff news. We are watching Chair Powell's testimony to Congress, not to mention U.S. CPI numbers that we'll be waiting for, Haidi.
And it is all about the tariffs and the threatened tariffs and the future tariffs and the ones that are yet to come into effect. Let's bring up political news director Jody Schneider, and we continue to hear from President Trump on a wide range of matters. But let's tackle the trade side first, right? Obviously, we saw the formalisation of the steel and aluminium tariffs on March 4th. They'll take into effect, but he's also spoken about a range of other ones that could be to come.
That's right. This really effectively is sort of the starting gun, if you will, in terms of the tariffs. President Trump earlier had paused tariffs on Colombia, Canada, and Mexico, put in place 10% ones against China, but those were not nearly as severe as they could have been. But these 25% tariffs on steel and aluminum are going to have an effect. He said, first of all, no exemptions on them. These were remarks that he just made while signing the executive order in the Oval Office. Although then he did say, well, he would look perhaps at an exemption for Australia. He had a call with Australia's leader this afternoon, and apparently in that call, the Australian leader thought there might be an exemption. So maybe some of this will change. But in the meantime, this is going to have a very broad effect, and it will have a big effect on Canada and Mexico, the two countries from which the U.S. does import the most steel and aluminum.
And Jody, of course, we are also waiting for more details when it comes to President Trump's plans on Gaza, Ukraine as well. Right now, the president saying that he would pause Jordan, Egypt aid if they're not taking Palestinians. What do we know on his geopolitical ambitions?
Yeah, this just came up in the last little bit, too, so we're still parsing these comments. But he did make those comments about this is his plan to redevelop Gaza, if you will, and to have relocate, he says, temporarily the Palestinians who are living there now to other countries. And when he first made these remarks last week, he said other countries, Egypt, Jordan, and the like, need to accept these refugees. At that point, they'd be refugees from Gaza, and these countries have come back and criticized the plan. He also had some words about the hostages who were released this past weekend. He said they looked terrible. They were gaunt in the pictures. He said they looked terrible, and that if he is really rethinking what could happen with the hostage exchange, future hostage exchanges, and the ceasefire, if he's very concerned about what the state of the hostages there. So he did make a number of remarks concerning Gaza and the Middle East.
And he also talked about, there's been a lot of concern, and even sort of his own spokespeople have sought to sort of walk back the idea that the US would take over Gaza and redevelop it. But he said that the Palestinians would not have a right to return because they would be relocated to, other places with better housing. This is really likely to just sort of, spur another round of rebuke and anger.
That's right. The reaction, except from Israel, to this was uniformly critical. The other countries in the region, the Arab countries in the region, first of all, said that this was not the way to do this kind of thing, not to negotiate this, and also that that the Palestinians living there, in the words of these countries, and Jordan and Saudi Arabia made these statements, were saying that it is taking away their rights, as to where they live right now, that they would become refugees, and that is unacceptable. The president did walk back his initial remarks. He had initially, when he made this statement, said that there could be, the U.S. could get involved. He walked it back and said, well, no, the U.S. would not be involved. There wouldn't be troops on the ground. There wouldn't be U.S. money behind this. But we've heard things back and forth, and he continues to talk about it, to say that this is something that he wants done. So it's another wide-ranging set of remarks from the president. He also said he was pardoning Rod Blagojevich, the former governor of Illinois, who was jailed on bribery charges. He has served a sentence and is now out. He said he is pardoning him.
Bloomberg's political news director Jody Schneider there in Washington. And as Jody mentioned briefly, Australian Prime Minister Anthony Albanese had that conversation with President Trump and says that Trump has agreed to consider an exemption for Australia from US tariffs on steel and aluminium. Let's bring our Australia government reporter Ben Westcott. This is always an interesting dynamic between two long-standing allies. What do we know?
Well, we know at this stage that Prime Minister Anthony Albanese has said that he has been told by President Trump that they will consider an exemption for Australia. And this seems especially remarkable given the fact that President Trump has just said in the White House there would be no exemptions. However, when asked by reporters about whether or not Mr. Albanese was correct, President Trump said that Australia and the US did have a trade surplus, that we bought lots of planes from them, and therefore that he would definitely give it consideration. So it does sound like Australia may be getting special treatment on this. However, as we know from the last time that this happened, Trump introduced very similar tariffs during his first term in the Oval Office, that it takes several months for the negotiations to kind of play out. Now, Prime Minister Anthony Albanese may not have several months. He has to hold an election by May 17, and I'm sure he'd like to get an exemption by then. However, that just may be how long it takes, and it's going to be all hands to the wheel, I think, in Canberra to try and get those exemptions as soon as possible.
How are his efforts in order to build a relationship with the Trump administration going so far? And given, as you said, that you do have elections, how would that shape future relations with the U.S.?
Yeah, the Albanese government has been working very hard to build relationships with the Trump administration, and there's two different reasons for that. One is that, unlike the previous Morrison government that worked with the Trump administration 1.0, this is a centre-left government in Australia. They're less ideologically aligned, and therefore there needs to be more work to sort of make sure that those priorities match up. But the other side of this is that Australia was caught completely unawares by the first Trump presidency, having to rely on Greg Norman, the shark, to get into contact with the president-elect back in 2016. And so this time Australia was determined to make sure it wouldn't be taken by surprise. So we've already had meetings between Penny Wong and her counterpart, Defence Minister Richard Marles and his counterpart Pete Hegseth, and now 2 phone conversations between Prime Minister Anthony Albanese and President Donald Trump. So the Albanese government is working very hard. That being said, there hasn't been a huge number of points of contention so far. The relationship will really be tested when those take place.
Australia government reporter Ben Westcott there with the latest. And let's take a look at the market reaction. We are seeing stocks in Asia set to advance after, of course, traders kind of looked past mostly the concerns over tariff threats and towards US inflation data and the implications for the Fed. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. And Garf, why worry about something when you can push it down, down the track, right? But also there seems to be, a need for traders to kind of move the narrative back to the bread and butter.
Yeah, well, for the moment, tariffs seem to be being treated as clouds on the horizon, but nobody's quite sure if there's going to be rain or hail or if they're going to fade away. So we can worry about those when they get a bit closer. The immediate comments from Albanese about Australia potentially getting exemptions for tariffs, that's acting as a reminder for traders that last time round, when there were, and Trump specifically said in today's announcement that he was reimposing the steel tariffs that he had imposed in his first term. Those tariffs did come with exemptions for Mexico, Canada and Brazil, which the overwhelming majority of steel that gets sent to the US comes from those places, or steel and aluminum. So there is a lack of any real feeling that this is going to be an immediate hard hit to a whole range of issues. Unlike, you think a week ago, when, it was only just a week ago, when Trump said 25% tariffs across the board on Mexico and Canada, except for Canada Energy, that was big, serious, immediate, okay, these are coming in straight away, tariffs, which then were delayed within a day, pushed back for 30 days. So there's a lot of noise, there's a lot of barking. So far, tariffs aren't really looking like they're going to bite as yet. There is a concern that markets are being too complacent about this because Trump and Treasury Secretary Bessent have made it clear that over the long term, they want tariffs. They think tariffs are a positive, both from the view of raising revenue and from adjusting the way the global economy works.
And yet we have already seen the market gyrations, especially in currency trading, and that seems to be working out well for some. Well,
currency traders love a bit of volatility and the chance to rapidly take and then exit positions with the potential that that there's going to be big moves one way or the other. That allows for your option strategies to play out. There's a lot of that going on, although even then, some of the volatility measures have come down recently, precisely because of this back and forth over tariffs. And I think also because we had some very strong moves since Trump was elected in a range of currencies. A lot of currencies are down a long way against the US dollar since November the 5th. So there has been a lot of tariff pain priced in, and there's definitely a sort of a headline fatigue in particular, unless and until we get concrete measures fully imposed. We can see, as it were, the whites of the tariff bull's eyes.
Garfield Reynolds there, who leads Markets Live Asia coverage as we brace for the major market opens here in Asia. Of course, we have just seen President Trump signing those 25% tariffs on aluminum and steel, saying that tariffs on metals could go higher. A U.S. official now saying that they will kick in March 4th. Coming up on the Asia Trade, we discuss how Trump's tariff threats are impacting commodities with Prestige Economics. UBS Wealth Management tells us why they anticipate more market volatility. Plus, we speak with New Zealand's Finance Minister Nicola Willis about her government's plans to lift growth. Much more ahead. This is Bloomberg. OpenAI CEO Sam Altman has rebuffed a $97 billion bid from a group of investors led by Elon Musk to buy the nonprofit that controls the ChatGPT creator. For more, let's bring in Bloomberg AI reporter Rachel Metz. Rachel, how expected was this, given that Altman and Musk have been fighting in court?
This was a bit of a surprise, but also a lot of things that Elon Musk does, I think, are surprises. So that makes it both surprising and not surprising, I guess I would say.
Rachel, I thought the response was quite amusing. He said, no thanks, but, we'll buy Twitter for $9.47 billion if you want. So, other than, I guess, the playful sparring, and we did see Elon respond as well, how much of a thorn in Altman's side does Elon Musk continue to be, as he kind of, is obviously unhappy with the way that OpenAI has turned out in terms of his original vision?
Yeah, I think there's a lot of things at play there. Sam Altman and Elon Musk have sparred online and offline for quite a while now. They started out as partners working on OpenAI together, and that fell apart at a certain point. And Elon Musk, as we know, has been in a court battle with OpenAI. And this seemed to me, I think in Sam Altman's response, you see he calls X Twitter. That in and of itself shows that Sam is also digging back at him. So I think there's a little bit of give and take there for sure.
What are the chances that Musk could force Altman's hand here?
I'm not sure how that would work. I think that's a really interesting question, but OpenAI is a privately held company, and I'm not sure how you would get somebody to sell their company if they're not interested in doing that. They do have a board. I think the board would have to at least look at this. But because they're not beholden to outside shareholders, it's not clear to me that this is more than Elon Musk trying to get more attention.
Our Bloomberg AI reporter Rachel Metz there as we continue to watch any further interactions between the two. But we have been hearing from President Trump talking across a range of issues from trade to the Middle East. So take a listen to what we heard.
No, but I would. He's now cleaner than anybody in this room. You got a pardon. He's cleaner than anybody in the room. Okay.
Thank you, sir. Next, in 2018, you imposed ad valorem duties, tariffs on imports of steel at a 25% rate. Since that time, a large number of exclusions and exceptions to that tariff rule have been implemented. Because of the damage to the United States steel industry that those exceptions and exclusions have imposed, we're now, this order would reimpose that 25% ad valorem tariff rate on imports of steel, and it's presented for your signature now.
Okay. Do you understand what that means? It's a big deal. It's a big deal. This is the beginning of making America rich again. Mr. Secretary, do you have anything to say? As you know, Howard is Secretary of Commerce, doing a fantastic job. And what do you have to say about it?
So when you imposed the tariffs the first time, right, you added 120,000 jobs. And since that time, it's been picked away and nicked away and excluded away, and we've lost 107,000 jobs. And remember, these aren't just general jobs. These are steel workers in America, and now you're going to bring them back. You're going to bring those 120,000 jobs back to America. You are the president who's standing up for the American steel worker, and I am just tremendously impressed and delighted to stand next to you.
So let me just make a statement, and essentially this is another way of saying we're doing a 25% tariff on steel and aluminum. So the failed American trade policies have led our once incredible United States steel and aluminum industries, once incredible, it's once incredible, not now, but they're not bad. I saved them because of my first term, totally saved them. If I didn't do what I did, I put massive tariffs, not the highest level, but pretty massive tariffs. We took in a lot of money and we took in a lot of jobs, but we were being pummeled by both friend and foe alike. Our nation requires steel and aluminum to be made in America, not in foreign lands. We need to create, in order to protect our country's future, a resurgence of U.S. manufacturing and production, the likes of which has not been seen for many decades. It's time for our great industries to come back to America. I want them back to America. This is the first of many, and you know what I mean by that. We're going to be doing others on other subjects, topics. Protecting our steel and aluminum industries is a must, and today I'm simplifying our tariffs on steel and aluminum so that everyone can understand exactly what it means. It's 25% without exceptions or exemptions, and that's all countries, no matter where it comes from, all countries. If made in the United States, however, United States of America, there is no tariff, it's zero. So if it's made in the United States, there is no tariff. All you have to do is make it in the United States. We don't need it from another country. As an example, Canada, if we make it in the United States, we don't need it to be made in Canada. We'll have the jobs. That's why Canada should be our 51st state. We'll bring back industries, and we'll bring back our jobs, and we'll make America industry great again. So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States. Now, we're going to be meeting over the next 4-week period, maybe on a weekly basis, and maybe we'll do a couple of them at different times and maybe together. But we'll be talking about other subjects like cars. We'll be talking about drugs and pharmaceuticals. We'll be discussing chips. And we're going to be doing some other things in addition to that, all which will bring in a lot of jobs into our country. Cars is going to be a very big one and a very important one, and America is going to be stronger than it ever was before. Okay? So are you finished with everything, I think?
We have aluminum still to sign.
Okay,
here,
let's
sir.
go.
So with respect to aluminum, similarly to steel, since 2018, a large number of exceptions and exemptions have been added into the law. This eliminates all of those and also increases the ad valorem tariff rate from 10 to 25%.
Mostly the last part is the most important, right, would you say?
Totally.
So basically, this is aluminum, the same thing, no exceptions, no nothing. And it's going to bring our aluminum business back and may go higher. I mean, frankly, it may go higher. And we're going to also be talking about we're going to be talking about things over the next 3 weeks that I think will be amazing for our country, amazing for our jobs, and will bring us to a new level of prosperity. And I think, frankly, our allies and our enemies all over the world expected this. They really expected it for years. They really expected it sometime during the Biden administration, but they didn't do anything. As you know, I put tariffs on China. We took in hundreds of billions of dollars with those tariffs, and Biden wasn't able to get them out. He tried to, but it was too much money. He couldn't do it. And we're going to be doing a very concise and, you know, very, it's going to be good. And I don't think if done properly, and we're going to try and do that, we don't want it to hurt other countries, but they've been taking advantage of us for years and years and years, and they've charged us tariffs. Most of them have charged us, almost everyone, I would say, almost without exception.
Definitely.
They've charged us, and we haven't charged them. And it's time to be reciprocal. So you'll be hearing that word a lot, reciprocal. If they charge us, we charge them. If they're at 25, we're at 25. If they're at 10, we're at 10. And if they're much higher than 25, that's what we are too. So that's having to do with everything. That's not just steel and aluminum. But we'll be discussing that over the next couple of weeks. But we will be looking at chips, and we will be looking at cars, and we're going to be looking at pharmaceuticals, and there'll be a couple of other things also in addition. That'll be
Mr. President,
Yes.
Mr. President, U.S. steel workers have said that they support this move. What would you say to American consumers who are worried that prices
that they do support this move?
U.S. steelmakers.
I love the steel makers. That's
But,
good.
well, what do you say
Of course
to
they,
American
because they want to save their businesses. U.S. Steel will now be a very valuable company. Anybody that makes steel is going to be great. Anybody that works in big steel is going to be very happy.
What do you say to consumers who are worried about prices, sir?
Oh, I don't think you're going to. No, you're going to ultimately have a price reduction because they're going to make their steel here. There's not going to be any tariff. These foreign companies will move to the United States, will make their steel and aluminum in the United States. Ultimately, it'll be cheaper. But we'll also have jobs, many, many more jobs.
Sir, what are you looking at in terms of tariffs on cars and chips?
Well, we're looking at numbers, and we'll be coming up with a number, but we make some of the finest cars in the world, and some companies prohibit us from selling those cars in their countries, but they sell us cars, they send cars to us, and we don't do that. We charge nothing or 2.5%, and they'll be charging 100%. They'll be charging much more than that if you look at some of them. So I think those days are over, but we'll be announcing on other things such as cars. We got some other things we'll be doing, but the biggest thing is reciprocal. We want tariffs to be fair. If they charge us, we charge them.
Tomorrow, the reciprocal tariffs?
We'll be doing reciprocal over the next, I would say, 2 days, don't you think? 2 days, yeah, maybe.
Mr. President, the Australian Prime Minister has said that you are considering an exemption for Australia on steel. Is that correct? And why?
I just spoke to him, very fine man, and he has a surplus. I mean, we have a surplus with Australia, one of the few. And the reason is they buy a lot of airplanes. They are rather far away, and they need lots of airplanes. And we actually have a surplus. It's one of the only countries which we do. And I told him that that's something that we will give great consideration to.
And would you consider one for the UK as well?
Well, we have a huge deficit with the UK. Big difference.
You don't have a deficit with Argentina. Is that country also going to be?
We have a deficit with a little deficit with Argentina. We almost with every country, but Australia, because of the airplanes, they buy a lot of airplanes. There's a little bit of a surplus.
Mr. President, if other countries retaliate,
I don't mind.
What is your plan for example, farmers? Last term, you.
Well, the farmers are going to be helped greatly. Yeah, the farmers are going to be helped greatly because they're not going to be dumping everything into our country. This will be a great bill for farmers. And in terms of retaliation, if they retaliate, it's, as I said, it's reciprocal. So if they raise it a little bit, then we raise it automatically. So I don't think it helps for them to retaliate. But also remember this, they can't really retaliate because we're the piggy bank. We're the piggy bank. But if we don't do this, we won't be the piggy bank for long. We won't be much of a country.
Mr. President, you see that report, sir, that Hamas was going to stop releasing Israeli hostages, and what was your reaction?
I think it's terrible. Look, I looked at the hostages.
President Trump there speaking about the steel and aluminum tariffs that he's just imposed and announced those to come into effect around March, according to a U.S. official, but really honing in on the idea of reciprocal tariffs to come over the next 2 days, the U.S. imposing import duties that match tariffs on American products. Let's delve into the implications for the market. Joining us now is Jason Schenker, President and Chief Economist at Precision Economics. Jason, great to have you with us. This idea of reciprocity, this idea of using tariffs in order to negotiate with other countries, he has used this in his first term as president. But how much more volatility does this add to the markets, especially given that businesses really don't know where this could go from here?
I think this presents a lot of risk. I think that there are some significant concerns, but at the end of the day, we find ourselves in the middle of Cold War II, and what President Trump is trying to do, it seems, and his intention is to increase the potential for U.S. economic security, and with that, U.S. national security. And as we think about what is economic security, I think we all know what national security is, but economic security really has two pillars. One is economic power of a country. Think about GDP or the strength of U.S. equity markets, things like that. The other is, if we think about economic self-sufficiency. And of course, U.S. supply chains very exposed to a number of countries that are now becoming much more adversarial to the United States. I think specifically China. And if that's really going to be a supply chain that has to be fully decoupled, this is going to be a lever to drive additional concessions that support U.S. national security and U.S. economic security aims.
You know, right now we're hearing from President Trump speaking in an interview with Fox News, saying that he actually spoke with China's Xi Jinping since his inauguration. We have seen those tariffs additional on China. We have seen retaliatory tariffs from Beijing as well. When it comes to China, though, how much power does President Trump have in order to negotiate? Because we're not talking about smaller, more vulnerable, more dependent economies.
I think that the intention here is to try to isolate China and the other countries in its Cold War II alliance, Russia, Iran, North Korea. And I think as part of that strategy, if we think about how did economic soft power diplomacy work in Cold War I, the United States used its financial and economic power in order to get a number of other countries to help isolate its adversaries. I think that as President Trump is pushing through these tariffs, the intention isn't necessarily to exact any kind of additional pain on countries that may be unaligned. I think the intention here is to get those countries to give either some level of geo-economic, national security, or economic concessions, like we've seen with influence around, say, Panama and the push there to get Panama to reject the Belt and Road Initiative. In other words, if you're taking money from China, can't take money from the U.S. as well. And I think this is part of that tool to really drive a further wedge between China and unaligned countries.
Jason, do you think that will be successful? Because, of course, the major difference this time around is that Beijing is struggling with an economy that is structurally in a worse place than the first time that we had a trade war.
Well, I'm not thinking about a trade war. I'm talking about the Cold War. And so if we think about where China is now, China's much stronger economically than in 1989 when the wall fell. I'm thinking about, well, China is much stronger, although right now it's economically weaker. Why is it weaker? Well, because foreign direct investment has fallen significantly in terms of annual levels going into China. Why? Because China looks like a great place to send your money if you never want to see it again. And so I think these kinds of moves, geopolitically, using tariffs as a way to drive policy changes among non-aligned countries to get them to be more compliant, to help to prevent Chinese tax evasion, Chinese tariff evasion, tariffs or taxes, through transshipments. I think a lot of that is the focus, and I think it has a lot to do with the fact that China, Russia, Iran, North Korea, they've collaborated economically, militarily, technologically. We've seen that in Ukraine. We saw it in Israel. We risk seeing that in Taiwan. That's, I think, what is really driving these moves by the Trump administration.
Are markets, are traders being too complacent at this point?
I think there's a lot of supply chains to unwind here. I don't necessarily think there's complacency. I think that the United States is the strongest economy in the world, has one of the fastest growth rates, has had for a number of years now, one of the fastest growth rates of any advanced economy in the world, has the plurality, if not outright majority, of global market caps. So I think I would still be betting, and I would here, on the United States to win this. I do think, though, that there are going to be moments of volatility and, of course, questions. And we saw it last week with Mexico, with Canada, what's going to happen. And these trade and tariff risks, they hang like a sword of Damocles above these trade partners, right, as well as above U.S. businesses, adding volatility and risk of peril. But in the end, I do think you're going to see a number of these countries come up with concessions that will probably further isolate the Chinese economy. So I'd be very concerned if I was long China.
One way that President Trump wants to build that economic security, of course, is through really dominating the age of AI. We have seen all of these gyrations around tech companies, lofty valuations at this point. We already heard that Elon Musk is now bidding for that nonprofit that controls OpenAI. Do you expect more gyrations in the tech sector, or is this also going to be for 2025 the sector to dominate markets?
I think tech's got a lot of opportunity. We still have a very tight labor market in the United States. 7.6 million open jobs as of December, 4% unemployment rate, jobless claims, continuing claims below 1.9 million. I mean, it's a tight labor market in the United States. So I think there's still a lot of opportunity. Companies are looking for leverage, and that's what they're looking to for AI. But as I look forward in the not too distant future, I'm sure you're very well aware about document 79, in which China had released in 2022 its intention to essentially remove any U.S. hardware and software from the Chinese economy, and what some folks have called delete A or delete America. I think we're going to see the countervailing balance of that, and that's going to be to delete any Chinese hardware or software from the United States and from its allies.
Right.
What that means is companies like DeepSeek and the like, and TikTok, we'll have to see where everything goes going forward. But I suspect not just that software, but hardware going forward, if it's made in China, you won't be able to use it in the United States.
Jason Schenker, good to have you with us, President and Chief Economist at Prestige Economics. We have more ahead on the Asia trade. This is Bloomberg. Meta has begun a new round of job cuts, a process that is set to eliminate 5% of the company's staff and affect around 3,600 people. CEO Mark Zuckerberg says the tech giant is cracking down on low performers and creating the headcount required to hire the talent it needs to dominate the AI race. Let's bring in our tech reporter, Kurt Wagner. Kurt, so what are we expecting Meta to look like once we see the completion of this vision?
I mean, I don't think you're going to notice a huge difference in the sense that 5% reduction for a company that has, more than 70,000 employees is maybe relatively small. But as you point out, this is to focus more on AI, right? So I guess if you were to fast forward a year or two into the future, you would expect a company that is much more technologically focused, right? So maybe cutting some teams that aren't focused on tech to replace them with engineers, folks who do focus on AI. So I think that's the hope here, is to, I guess in Mark Zuckerberg's words, weed out some of these lower performers, but to focus then on stuff that is more technical.
Well, what are their sort of ambitions, right? Obviously, competitors like OpenAI, now DeepSeek, has that changed the nature of the competition at all?
No, I don't think so. I mean, this has always been the play for Mark Zuckerberg to not only do AI, but do open source AI, right? And I think what we've seen from OpenAI and DeepSeek and others is that they feel validated by that strategy. They feel that the more investment that gets put into this from the industry level, the more that will ultimately come back to help them as folks who are laying that foundation of technology. So I think the strategy sort of remains the same. It's just a deeper or heavier investment maybe than we've seen before.
Bloomberg's tech reporter Kurt Wagner there with the latest on Meta. Well, French Finance Minister Eric Lombard says France will keep a digital tax that hits major US tech firms despite past threats of tariff retaliation from President Trump. Speaking exclusively with Bloomberg, Lombard told us more about Europe's stance on trade talks with Washington.
President Trump is a deal maker, so Europe will answer as strongly as the position of the United States, and either we'll have our own tariffs or we negotiate. We'll see according to the reaction of the United States to the answer we are preparing.
Europe already has reciprocal tariffs in place on US steel from the previous trade conflict. They are now frozen. They could be unfrozen in March. Is that an easy response for Europe to go to? You unfreeze those reciprocal tariffs and let them snap back in?
I will not give the answer before we have the official answer from Europe.
How much pain is Europe prepared to inflict on the US?
We are prepared to do whatever is necessary in order to be balanced. We have the same tools, we have the same weapons if need be, and we will use them very calmly.
And we can assume that the European Commission has a list of targets that they would enact tariffs on.
We are ready because we knew that was coming, so we are ready.
Okay. President Trump has asked for a probe into taxes globally. And one thinks of the digital taxes that France has that overwhelmingly impact US tech companies and bring in, what, 500 to 700 million euros a year. Would you and France consider dropping that digital tax in order to avoid a trade war?
I'm not sure that the tax issue is related to the trade war, but we have put together a tax actually on the digital companies that we are maintaining because that is the law of France, and we'll see whether that comes into another type of conflict with the United States. I hope it will not, because tax is a question of sovereignty, and every country has its own tax system. We have our own, and we will stick to that.
French Finance Minister Eric Lombard speaking exclusively with our colleague Tom McKenzie there. Coming up on the Age of Trade, we'll be speaking with New Zealand's Finance Minister Nicola Willis to discuss the country's golden visa reforms and her government's plans to boost economic growth.
Heidi, let's turn to automaker BYD. It's announced plans to integrate the Chinese-made DeepSeek AI model into its EV software. Bloomberg's transport reporter Danny Lee joins us now from Hong Kong. Danny, of course, we have seen the market gyrations around recalculations over AI models because of DeepSeek. How significant is this development?
For BYD, this is yet another addition into enhancing its EV lineup, and its integration of the DeepSeek AI is just one of a number of things it announced at an event last night to really sharpen its edge in driver-assisted software, for example, particularly around how its cars can be far more advanced in terms of how it can be used on the roads with more automation to an extent, and so therefore its ability to add these kind of features to really upgrade the tech in its cars is a significant one in the main. But the DeepSeek component is an extra cherry on top here, basically. So, yeah, BYD really ramping up its efforts in driver-assisted software, something that Tesla has really pushed forward with its so-called full self-driving, and really opens up a new front in this huge amount of competition coming out of China and in China for more advanced technologies in EVs.
And look, one of the reasons why BYD has been front and centre when it comes to being ahead of the competition has been its incredible pricing strategy, right? Are we seeing that being now replicated in international markets?
We are seeing increasingly its playbook that it has used in China to offer very affordable pricing being translated overseas, where it's got more ambitions to do even more sales, up to 1 million cars it wants to sell in overseas outside of China in 2025. And so therefore that pricing discrimination you see relative to China is coming down increasingly. And so therefore it is becoming more ambitious. But I think the key thing is when it can potentially bring its autonomous driver-assisted tech from China overseas as well, because that would make its cars even more valuable. And what it's trying to do in China in particular is a real interesting test to see just how much success it can replicate from China to the rest of the world.
Bloomberg's transport reporter Danny Lee there with the latest on BYD. Let's get you caught up to date with some of the other corporate stories that we're following. And TSMC is expecting first quarter sales to be at the lower end of its forecast range due to production losses from last month's earthquakes. The Taiwanese chipmaker says quake losses were about $160 million. TSMC is maintaining its first quarter gross profit margin forecast and full year outlook with revenue guidance of up to nearly $26 billion. Honghai has reported a 3% rise in January sales and strengthened its first quarter outlook. The Taiwanese firm is NVIDIA's main supplier of AI servers and Apple's biggest iPhone assembler. It reported revenue of over $16 billion last month and says first quarter growth will top the average level of the past 5 years. SoftBank is said to be looking at a technique called project financing to pay for its planned investment into the Stargate project with OpenAI. Sources say one scenario under discussion would have those companies and their partners Oracle and MGX contribute about 10% of the overall cost as equity, while tapping debt markets for the rest. Morgan Stanley is looking to sell another $3 billion of debt related to the X social media platform. The bank led a sale of more than $5 billion of the debt last week, with investors betting on Elon Musk's close ties to the White House. The current tranche is expected to price at 98 cents on the dollar or more and pay an interest rate of 9.5%. Shery.
Heidi, we have breaking news crossing the Bloomberg terminal at the moment. We're hearing that the Department of Justice has discussed dropping corruption charges against New York City Mayor Eric Adams with Manhattan prosecutors. This is according to people speaking to the New York Times. According to the report, the officials have also had discussions with Adams' defense team, and President Trump has been in direct contact with the mayor for weeks. Adams faces charges of bribery, fraud, conspiracy, and soliciting illegal campaign contributions. He's pleaded not guilty, refusing to step down as mayor. He's also made some overtures to President Trump. He embraced him at an Ultimate Fighting Championship event at Madison Square Garden. After the election, he traveled to Mar-a-Lago in Florida just before the inauguration as well, and attended his inauguration in Washington, D.C. And now the New York Times reporting that the DOJ is discussing dropping those corruption charges against the New York City mayor. We have more ahead. This is Bloomberg.
We are, of course, watching some of these incoming Australian earnings as that season gets underway. Macquarie profits seen little change, as we saw in particular the business when it comes to the commodity trading unit seeing a drop. We're seeing upside, though, of 1.8% trading at the moment for Macquarie, and also watching CSL, the pharma giant, seeing the full year numbers coming at $3.2 billion. There was some weakness when it comes to the vaccine demand side, and we'll be talking a little bit more about that when we speak to CSL later on today. Well, shares in Australia's largest asset manager, Macquarie Group, gaining there after it reported third quarter profit broadly in line with a year earlier. Paul Allen joins us now for more. What are they saying when it comes to the outlook towards that full year result?
Caution seems to be one of the key words there, maintaining a cautious stance, but they're pointing out that they've got a strong and conservative balance sheet. But the commentary around volatility is hard to ignore as well, warning of volatile market conditions going forward, particularly around rates, inflation, geopolitics, but of course not mentioning any particular risk by name. But we don't get a full set of numbers in these quarterly updates, just sort of general guidance. So the business in the commodities trading arm, that kept on slipping, but it was offset by improvements in the banking division. Macquarie's got a lot of surplus capital, though, about $5.3 billion, and it's also completed about half of its previously announced share buyback. That was about 2 billion Australian dollars. So we're going to get the full year result in May. It might be buffed to a degree by the weak Australian dollar, because that slid about 10% in the December quarter.
Paul, pharmaceuticals giant CSL also reported first half earnings this morning. So what were the key takeaways?
Yeah, we had a reasonable set of numbers there. Full year net income, half year net income, I beg your pardon, up 5.6% to just a tad over $2 billion. Reaffirming guidance for the full year of 3.2 to 3.3 billion. So that would mean growth overall of about 10 to 13%. One of the bright spots was the bearing business. This is the blood plasma business that operates out of Melbourne. That drove a lot of the growth, saw about 10% of the revenue. But there was a drag from another part of the business called Schenker, which takes care of vaccine manufacturing. Vaccination rates have been lower, particularly in the US, and that saw a 9% decline in sales. The interim dividend of $1.30 a share, that was a narrow beat, but analysts still really like this stock. 16 buys, just 3 holds, 0 sells, and even though we saw a little bit of weakness at the open, CSL shares performing pretty well after the first hour of trade.
Paul Allen there joining us from Sydney. And we're watching the markets and the reaction, of course, to the tariffs on aluminum and steel from the U.S. We have seen gold soaring on that safe haven demand, but also we have seen Beijing now allowing insurance firms to invest up to 1% of their assets in gold. So that shift in China, with authorities perhaps recognizing the lack of investment options, has also helped send gold higher. You can see right there with record highs has been one of the strongest performing commodities the past year. We'll also be watching, of course, the pressure on broader markets from this tariff risk. S&P futures at the moment under pressure, and you can see the CAD in the Canadian dollar also losing ground, Haidi.
We're also watching, of course, broader commodities trading there in light of those tariff risks. In a sense, we have sort of a sense that traders have sort of put off that risk, at least for now, until they come into implementation, right? Crude markets at the moment, we were seeing sort of very modest upside there, about 0.1%, holding on to those gains as we saw lower Russian flows offsetting the impact of those tariffs there. Overnight, we did see US aluminium as well as copper prices seeing a jump on the announcement of these tariffs. The market opens in Seoul and Tokyo are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens, and that reaction to the tariffs now announced by President Trump on aluminum and steel of 25%. We have heard, Haidi, that there would be no exemptions, although he could be considering Australia.
Yeah, so much of this goes down to these bilateral relationships or conversations that President Trump is having with individual leaders. We also heard that apparently he has spoken with Chinese President Xi Jinping as well, although we're not getting sort of a whole lot of details about that. But of course, at the moment, we're seeing these markets sort of kind of kicking the can down the road when it comes to the tariff threats and perhaps just maintaining a level of caution, but still really wanting to focus back on US inflation and the Fed.
Yeah, of course, we are going to hear from Chair Powell in his Congress testimony this week, as well as we are watching the currency space. Of course, we are seeing the Korean won under pressure as we are seeing that boost to the U.S. dollar on these tariff news. We're getting the 10-day data from South Korea with exports rising for the first 10 days of February, 0.8% year on year. When it comes to imports, rising 0.3% year on year. That leaves a trade deficit of more than $2 billion. The average export for the first 10 days falling 6.4% year on year. Of course, the number is a little bit mixed given the fact that we've had holidays in South Korea, not to mention the slowing demand also globally, and perhaps that impact on semiconductor exports out of the country. The cost becoming online now up 0.6% as we continue to watch those automakers that could take a hit and be exposed to the tariffs, whether it's in Canada or, of course, China demand as these Korean automakers sell there. We know that the U.S. accounts for around 13% of Korean steel export markets, the U.S. accounting for almost 20% of Korea's exports last year. So we'll continue to see the market implications for that economy as Japan today, Haidi, is away on holidays.
Shery, take a look at how we're tracking just an hour into the trade here in Australia. We are seeing stocks on the rise, about 0.3% when you take a look at the broader ASX 200 there. It is in the thick of earnings, of course, with first half results being issued for a number of companies, including the pharma giant CSL, Ramsay Health, Breville, Macquarie is one we're watching there as well. But we are seeing industrials, mining stocks supporting that broader benchmark there. We're also seeing a bit of a move when it comes to the Aussie dollar, the rise coming as we saw those tariff talks set to continue between Australian Prime Minister Anthony Albanese and President Trump, saying that the US President had agreed to consider an exemption for planned tariffs on steel and aluminium because, in his words, Australia buys a lot of aeroplanes. So that sort of narrative is still on foot at the moment, with the Aussie dollar a little bit sort of giving back some of those gains, if you will. We're also watching oil prices holding on to some tepid gains as we saw the lower flow of Russia flows kind of offsetting the more bearish impact of the Trump tariffs there as well. Watching US Treasuries as, of course, the focus shifts back onto the inflation outlook for the US and what the Fed does next. Shery.
Heidi, let's delve into all of the market implications and bring in Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management. Hartmut, always great to have you with us. Of course, we talked about the Trump tariff risks, but also, as Heidi alluded to, that shift potentially back to U.S. CPI numbers, to what Chair Powell has to say. How much longer are we going to be trading on headlines right now, given that President Trump is really taking over the news cycle at this point?
Well, my impression would be at least until April, because we know that some of the tariff measures also are slated for that kind of date. So that wouldn't go away. But I think, what we also tell our investors, our clients, is yes, of course, the tariffs is not something we will completely dismiss or ignore. But at the same time, especially in this round, right, compared to Trump 1.0, we have seen that they come on and they come off, and sometimes within a space of just simply days. So we also need to look at other factors, the ones that you also mentioned right now, so economic factors. And on top of that, we're also saying, okay, there is time for equities, or especially also U.S. equities. We see maybe 8-9% upside for the end of the year, but also put in some maybe against some particular risks, some high-grade bonds, investment-grade bonds, and also gold. So that mix, I think, should give us a pretty good proxy against all these possible tariff risks, and we shouldn't take them too much into consideration either.
When it comes to the tariffs, though, it's a concern that it could really alter the Fed's trajectory from here, right? At what point can we gauge how it's going to affect the data that the Fed is really looking at every single meeting in order to decide when those cuts come? And what will that mean for the markets that seem to have gotten really ahead of themselves when it comes to pricing in the next moves from the Fed?
I think that potentially takes a bit longer, right? Also from experiences, we're talking at least 6, if not 9 months or so, until really when you see it in the export data and possibly also consumer data, so that takes a lot longer. And again, maybe taking some examples from also the previous Trump period, right? We have seen also what we're not seeing now for aluminium, etc. Right? These things then have actually come off the table relatively soon again, before they really had a very significant effect. So I think probably the effect that we're seeing on possibly something getting removed again is probably shorter than the ones where we would see a potential economic impact.
So at this stage, when you're looking at the broad risks ahead, how do you hedge those moves? I mean, we have seen this incredible rally in the tech sector, especially in the U.S. Could you find more value across Asia?
Yes, I think Asia is also one of the areas. So, for example, one place we have liked for some time and is actually working quite well now is Chinese internet names. So, as a sector, we continue to like this. We think there is more upside. But the good thing about Asia is also we have different drivers in the different markets. So, for example, for AI, as you just mentioned, for example, we see Taiwan, especially with the leading semiconductor companies, also as an upside area. And then India could also be quite interesting. It has actually corrected to some extent, right? But here we see probably the year. It was almost a year now that the more difficult period of earnings growth is coming to an end, and probably towards the middle of the year we should see that earnings growth go up again. And when that happens, you even have upside also in India, we think. So you have different drivers for the Asian markets. So therefore, we also find the Asian markets attractive.
Yeah, talk to me more about China, because you've talked about some of the internet names, and I wonder the sort of revelations for most of the world about DeepSeek that came over the last couple of weeks. Has that meaningfully changed your view when it comes to China tech?
It certainly gives it a little bit of an additional flavor, but actually we have liked China tech even before that, since sort of the second half of last year, and we continue to. And there's also other reasons, right? So in many areas, if you look at the last 2-3 years, right now you see they're handing back more money to shareholders, for example. They're revenue growth in many cases actually starting to move up a bit again. So it's not only about one single source here, but it's really the entire sort of industry is coming to a point again where also, given how low the valuations are compared also to maybe some other global names, that this is actually quite interesting beyond just one driver.
What do you think the impact of sort of, if you expect sort of a relentless dollar strength to continue to play out, do you see that as having a negative impact across some of these Asian markets?
Yeah, especially for sort of imports on the Asian markets, right? Therefore, it potentially also would have somewhat of a negative impact for the US. So I would argue, yes, we don't think the dollar is necessarily going to weaken anytime soon, but on the same side, by the same token, if the US, for example, will put too many tariffs on and then the dollar rises, right, the US industries will also to some extent feel that, because everybody else outside the US is in a less good position to buy their products. So, you know, there's always a bit of a trade-off there.
Hartmut, Issel, always good to have you with us, Head of APAC Equities and Credit at UBS Wealth Management. We continue to track the market impact when it comes to those tariffs on aluminum and steel coming from President Trump. And you can see the steel makers in South Korea taking a hit again today. We know that the U.S. accounts for about 13% of Korean steel exports. We have seen President Trump talking about potential exemptions. He would be considering perhaps Australia, but overall, no exemptions so far, Haidi.
And we have seen that formalisation of the 25% tariffs on steel and aluminium, and sort of how that's, in a sense, if you're taking a look at what the markets broadly are doing, really kind of kicking that can down the road. But we are seeing a number of those miners seeing a bit more of a reaction. Initially, actually, early this week, most of them ended that first session of the week after it was initially alluded to actually trading a bit higher. More ahead on the Asia trade, this is Bloomberg. Well, it has been an eventful morning so far here in Australia and New Zealand, of course, just taking through what we heard from President Trump, formalising the 25% tariffs on steel and aluminium. He also had that conversation with Australian Prime Minister Anthony Albanese, where potentially an exemption for Australia was hinted at because of how much Australia buys when it comes to things like aircraft, for example. So a lot that is fluid at the moment, and of course a lot that affects some of these trade-reliant economies around the world and here in Asia. Let's bring in now our next guest, who's New Zealand's Minister of Finance, Nicola Willis. Minister, really great to have you with us. And of course, this would be something that you guys are watching very closely, given how trade and externally vulnerable New Zealand is. I know that when it comes to exports, the US is New Zealand's second largest market. How big do you assess that risk? And do you think New Zealand could also perhaps come to a workable arrangement when it comes to some of these exemptions?
Look, we have a very complementary trading relationship with the United States that is quite balanced in terms of goods and services flowing each way in terms of overall value. While steel and aluminium exports are important to us, they make up a very small proportion of our overall trade, with trade being more focused on wine, agricultural products and services. We're slightly different from Australia in that our steel exports already face a 25% tariff, which is a hangover from the last Trump administration, and our aluminium exports already face a 10% tariff. So obviously our representatives will be working very hard to get the best deal possible for our exporters. What we know is that when these tariffs were imposed previously, trade did continue to flow. Our exporters did continue to have their steel and aluminium enter the US market on competitive terms.
I know that Prime Minister Luxon had already had the sort of post-election conversation with President Trump. Do you know if more conversations have been had? Are there plans for more negotiations? And I do wonder sort of, you know, how you establish the tone of that relationship, given, as you say, New Zealand is not just reliant when it comes to the US out of trade for goods and services, but also the proxy impact on the other major trading partner, which is China.
Yeah, look, we have an excellent, long-standing and very warm relationship with the United States. We've already had high-level engagement, both between our Prime Minister and President Trump, but also at the level of both the Foreign Affairs, the State Secretary, Trade and Defence. Of course, part of the context for our relationship is the Five Eyes partnership. We have a really important defence and strategic relationship, and we're like-minded countries that have benefited from our relationship with each other. So that means that we're in a position to believe that we can continue to grow the trade with the United States, which has grown extensively in recent years and has been an important market for us. Obviously, we're a country that trades a lot. Around 1 in 4 jobs in our economy depend on our exporters, and so we do benefit from a world where trade flows freely. Equally, we have a broad array of trading relationships around the world. We export to many markets, and so we are confident that our exporters produce products of a quality and value that mean that they will continue to be in demand globally, no matter what's happening with the trade tariff context.
And Minister, of course, New Zealand has implemented new changes in order to support that growth, including changes to the Golden Visa in order to lure more wealthy migrants. How do you expect that to support your economy?
Well, look, our economy is very much an economy that has gone through challenges with high inflation and interest rates. We're a very pro-growth, pro-business, pro-development government. And so part of that is having an outward orientation, welcoming in external investment into New Zealand, where there are many sectors and areas that are very well poised for growth. We're in a natural resource abundant economy with a lot of entrepreneurial ability, highly skilled people, stable democratic institutions. So we've recently announced a new Golden Visa, and that visa is designed to provide a pathway to residency in New Zealand for people who want to invest in our economy. So where people invest up to $5 million in either firms directly or managed funds and commit to 21 days over a 3-year period of time in New Zealand, we're welcoming their investments. We have another category of visa that requires more investment, but essentially we're saying, well, we want to welcome the world's capital, the world's talent, come and be part of our success story.
Why not welcome that capital into the property market as well? Because you do still have a ban on foreigners other than Australians and Singaporeans in buying a home in New Zealand. Are we supposed to expect this to change eventually?
Well, we do allow people to purchase property in New Zealand once they become tax resident. But certainly there were parties, including my political party, that at the election campaigned for a broadening of rights to purchase property. And those are issues that we are discussing as a government, and it may be that there are changes on that in future, but we've not made that decision at this point.
It is really great to have you with us, Nicola Willis, who's of course New Zealand's Minister for Finance. More ahead here on the Asia Trade. This is Bloomberg.
It's a very impressive model, a very impressive piece of work. I think the team is probably the best team that I've seen come out of China. So that said, I think a lot of the claims are exaggerated and a little bit misleading.
A lot of the key things from DeepSeek are reducing the cost of innovation, but also raising this question of data control.
If you have potentially more constrained resources, you can make a better job than if you have immense resources and stop thinking about what to do efficiently.
There is a global competition right now between whether the world's going to be built on small d, democratic AI rails, or authoritarian, autocratic AI rails, and that's the big takeaway from this.
I think there's been a lot of excitement, but we'll have to see if it materializes.
Some of our guests at the AI Action Summit in Paris speaking about the potential impact of China's DeepSeek. This, of course, as we continue to watch the potential market repercussions when it comes to tariff risks around tech, especially as President Trump not only slashed tariffs on aluminum and steel, but he also threatened that he could be coming up with numbers when it comes to automakers and chips. President Trump saying that he has meetings over the next 4 weeks about tariffs on cars, drugs, and semiconductors as well. Japan is away on holidays, but you can see right there the chip makers in South Korea mostly trading to the downside. SK Hynix slightly higher, but of course this stock has already been hit very hard in recent weeks, given the developments around a more efficient and cheaper AI model from China's DeepSeek. Haidi.
Yeah, take a look. You mentioned automakers, right? And it was really just that line saying that he'll be holding meetings over the next 4 weeks pertaining to cars, to drugs, to chips as well. And on the cars issue, we are seeing a little bit of a move when it comes to Kia Motors trading to the downside, but Hyundai Motors seeing upside about 0.8%. It was also interesting overnight, Shery, that we did see those 10% tariffs from China on US cars hitting the likes of GM, Ford, Mercedes US SUVs as well. So we could see that. Really the counter impact as well.
And Haidi, these are some of the other corporate stories that we're following at the moment as well. SoftBank is said to be looking at a technique called project financing to pay for its planned investment into the Stargate project with OpenAI. Sources say one scenario under discussion would have those companies and their partners, Oracle and MGX, contribute about 10% of the overall cost of equity while tapping debt markets for the rest. Morgan Stanley is looking to sell another $3 billion of debt related to the X social media platform. The bank led a sale of more than $5 billion of the debt last week, with investors betting on Elon Musk's close ties to the White House. The current tranche is expected to price at 98 cents on the dollar or more and pay an interest rate of 9.5%. TSMC is expecting first quarter sales to be at the lower end of its forecast range due to production losses from last month's earthquakes. The Taiwanese chipmaker says quake losses were about $160 million. TSMC is maintaining its first quarter gross profit margin forecast and full year outlook with revenue guidance of up to nearly $26 billion. Honhai has reported a 3% rise in January sales and strengthened its first quarter outlook. The Taiwanese firm is NVIDIA's main supplier of AI servers and Apple's biggest iPhone assembler. It reported revenue of over $16 billion last month and says first quarter growth will top the average level of the past 5 years.
Shery, French Finance Minister Eric Lombard says France will keep a digital tax that hits major US tech firms despite past threats of tariff retaliation from President Trump. Speaking exclusively with Bloomberg, Lombard told us more about Europe's stance on trade talks with Washington.
President Trump is a deal maker, so Europe will answer as strongly as the position of the United States, and either we'll have our own tariffs or we negotiate. We'll see according to the reaction of the United States to the answer we are preparing.
Europe already has reciprocal tariffs in place on US steel from the previous trade conflict. They are now frozen. They could be unfrozen in March. Is that an easy response for Europe to go to? You unfreeze those reciprocal tariffs and let them snap back in?
I will not give the answer before we have the official answer from Europe.
How much pain is Europe prepared to inflict on the US?
We are prepared to do whatever is necessary in order to be balanced. We have the same tools, we have the same weapons if need be, and we will use them very calmly.
And we can assume that the European Commission has a list of targets that they would enact tariffs on.
We are ready because we knew that was coming, so we are ready.
Okay. President Trump has asked for a probe into taxes globally. And one thinks of the digital taxes that France has that overwhelmingly impact US tech companies and bring in, 500 to 700 million euros a year. Would you and France consider dropping that digital tax in order to avoid a trade war?
I'm not sure that the tax issue is related to the trade war, but we have put together a tax actually on the digital companies that we are maintaining because that is the law of France. and we'll see whether that comes into another type of conflict with the United States. I hope it will not, because tax is a question of sovereignty, and every country has its own tax system. We have our own, and we will stick to that.
So French Finance Minister Eric Lombard there speaking exclusively with our colleague Tom McKenzie. Let's take a look at our futures in Europe are tracking at the moment as, of course, we contend with the ongoing tariff threat. We know that in addition to aluminium and steel being formalised at 25%, President Trump also said he'd have more meetings when it comes to other categories of goods and has talked about EU tariffs being imminent there as well. But at the moment, we're seeing a bit of downside there, pretty flat when it comes to Euro Stoxx 50 futures and German DAX futures there as well. This after we saw European stocks extending the longest weekly win streak since about March, as we have really seen a pretty upbeat earnings season there, beating expectations and a lot of gains when it comes to energy and tech. All of this despite the ongoing tariff threats and implementation that we've seen from President Trump. More ahead on the Asia trade. This is Bloomberg.
OpenAI CEO Sam Altman has rebuffed a $97 billion bid from a group of investors led by Elon Musk to buy the nonprofit that controls the ChatGPT creator. Bloomberg Intelligence senior technology analyst Mandeep Singh joins us now with the latest. And Mandeep, given that this offer has already been rejected by Sam Altman, does this mean that it's dead in the water, or could we see more developments around this option?
I mean, the first thing we have to ask ourselves is why was there an offer like this, which values OpenAI almost, 1/3 of what the private market valuation is. In fact, there were talks about latest funding round being at around $300 billion valuation for OpenAI. So I think this has to do with the fact that OpenAI is looking to convert their nonprofit structure to a profit entity, and they have valued their assets at around, $40 billion or so. And so what Elon Musk is doing is saying, hey, I'm willing to give you a much higher price for those nonprofit assets. And, if there is a bidder out there, then I can outbid them. But essentially, it's complicating the whole conversion of OpenAI's nonprofit structure to a profit entity.
Yeah, so Elon Musk fundamentally has a very different vision for what he thought, when he was there at the beginning for what OpenAI would look like. And I do wonder, is there anything in the kind of political element, right? Musk is obviously very close to Trump. We know that Sam Altman has also gotten close to Trump as well. Trump has backed Stargate. So do we see that influence coming into play at any point?
I mean, there is. And look, if there was a deal that was palatable to the OpenAI board, then clearly, Musk has the wherewithal to get it approved. But with that being said, when you think about the price tag here, and I know $97 billion is a big acquisition, but compare that to all the CapEx guidance that we have gotten from the hyperscalers. I mean, we are talking about, 1 year of CapEx from Microsoft and Amazon. And so from that perspective, it's not a lot given how much these companies are spending in terms of developing AI.
And of course, this development of AI really has to do also with the geopolitical structure of the world right now, right? Take a listen to what the OpenAI Chief Global Affairs Officer had to tell us in a recent conversation.
There are two countries in the world that can build AI at scale: the U.S., the CCP-led China. And what that really means is that there is a global competition right now between whether the world's going to be built on small d, democratic AI rails, or authoritarian, autocratic AI rails. And that's the big takeaway from this.
Mandeep, how do you assess the latest views that perhaps the cheaper AI models being developed by China, including, of course, from DeepSeek, are really giving a run for its money when it comes to U.S. companies and the bigger, huge AI infrastructure projects like Stargate?
Yeah, you're right. And look, I mean, even though they talked about the $500 billion Stargate project announcement, with the DeepSeek moment, I mean, everyone is scrambling to figure out how do they bring the costs of AI down, and even, open sourcing some of their models, which is what DeepSeek has done. So clearly, whatever company is kind of focused on training their model has to think about an open source element to their strategy. And I think that's where everyone is headed in terms of these foundational model companies. And our view is you will see more consolidation now than you have previously in terms of the foundational model players, because one, you require high capex, and also you need to think about an open source strategy and lowering the cost of inferencing.
Bloomberg Intelligence Technology Senior Analyst Mandeep Singh there. Well, President Trump has followed through on his pledge to impose a 25% tariff on all steel and aluminium imports. For the latest is bringing our Chief North Asia correspondent Stephen Engels. So how sweeping are these tariffs likely to be?
Well, Donald Trump was pretty emphatic and definitive in his comments yesterday aboard Air Force One when he said he was going to be applying these 25% tariffs across the board on steel and aluminum imports to the United States. And he's come through on that pledge and essentially saying that this will apply to all steel and aluminum shipments into the United States, and there will not be any exemptions. There were exemptions the last time that Donald Trump imposed steel and aluminum tariffs in his first term, and this is effectively reviving and expanding the levies that he put in the first term, but not allowing those exemptions, because if you remember, Canada, Mexico, and Brazil, three of the top exporters of those metals to the United States, won exemptions in the first time around. This time, Donald Trump says there will be no exemptions. However, in an impromptu press conference here in the Oval Office, he did mention that he spoke with the Australian Prime Minister Albanese and said that he would consider an exemption for Australia, perhaps only because the Australians have a trade deficit with the United States. Probably more on that a little bit later on. But again, this would take effect on March 4th, so 3 weeks to the day right now. And I guess that could leave some room for some negotiations. But so far, it's pretty definitive that Donald Trump is going to be putting those tariffs 25% across the board on all steel and aluminum imports to the United States.
So, Steve, we know that China is the world's biggest steel producer, but doesn't necessarily export a lot to the U.S. So how are we expecting these steel tariffs directly or indirectly to affect Beijing?
Yeah, it's an interesting question because China still does export those metals to the United States. The Biden administration, though, enhanced some of the steel and aluminum tariffs on China to 25%, I believe, just in September. So you're absolutely right. They're not one of the largest exporters, but China, the argument from the White House is that countries like China and Russia are able to kind of circumvent some of the duties and trade restrictions using third-party countries to get its products into the United States or to sell to other markets, which in turn, like Canada, according to the White House, has been buying cheaper Chinese steel. As the Chinese economy has been slowing, it's been exporting more of its steel to places like Mexico and to Canada. And the White House claims Canada then ships some of its more expensive steel into the United States. So what the White House is saying it's going to be doing through these across-the-board tariffs of 25%, it's going to be cutting off those, I guess you could call loopholes to prevent third-party countries from getting around those duties. A case in point would be a country like Vietnam, where the White House again alleges that China has been selling a lot of steel to Vietnam, which then takes it and finishes it, rebrands it as Vietnamese steel, and sells it into the United States. So this is the origin or the rationale behind a lot of these tariffs that could indirectly impact China as well as its economy slows and exports more of its steel.
Our Chief North Asia correspondent Stephen Angle there. Well, President Trump is also threatening to cut off foreign aid to Jordan and Egypt if they don't agree to take Palestinian refugees from Gaza. He's also told Israel to call off its ceasefire with Hamas unless all the hostages are freed by midday on Saturday. He's also spoken about not having a right of return for Palestinians to the Gaza Strip once it's rebuilt. Let's bring up Bloomberg News editor Michael Heath. So, obviously a lot to unpack there, and there's been almost worldwide condemnation other than from Israel on some of the, if you want to call it plans or kind of just, spitballing ideas from President Trump. What are we seeing when it comes to the Arab nations?
Yeah, well, it's very difficult, Heidi, because as you say, they're completely opposed to it. But President Trump also said, specifically with Egypt and Jordan, that if he had to, he might consider cutting off aid, which would be a disaster for them. These are economies and countries with young populations that are not particularly financially stable, and the idea that they'd lose US backing there, which is one of the key points to them being able to do business or attract investment, that sort of thing, is their relationship with the US. It could create all sorts of instability, and I think this is one thing perhaps that President Trump needs to get across, is that you sort of need to be careful what you wish for in the Middle East, because in putting pressure on states, you often find that what comes is someone will fall and someone worse comes as well. So he needs to be very cautious on that. But that sort of casts some doubt on their outright refusal that they'll have anything to do with this. They need to be a bit more accommodative potentially. But it is also difficult to know whether he's trying to amp up pressure in general, or whether this is, he does intend to follow through on it. The issue with the hostages being returned, Hamas basically said that it was going to suspend the deal that it had with Israel in terms of returning hostages, that it softened that. And we've had a degree of hubris from Prime Minister Netanyahu, who was talking about Palestinians being moved, people in Gaza being moved to Saudi Arabia, which sort of outraged everybody as well. So there's no goodwill really between Hamas and the Israeli government there. It's probably in Hamas's interest to keep this, and you wonder whether President Trump's talk about moving them is just a way of really keeping it Hamas to go through with this deal. But even the propaganda efforts of Hamas in releasing these hostages, with these displays of armed fighters and that sort of thing, it's just designed to incite Israel as well. And of course, Palestinians, obviously, after all their suffering, the goodwill there is nil, basically. So, yeah, it's really unclear at present.
Mike, of course, the president right now also dealing with geopolitical pressure on multiple fronts. What are we expecting in terms of options to end the Ukraine-Russia war?
Yeah, look, it's the difficulty there, I guess. The Middle East is Trump is obviously a lot more active on because of the relationship with Prime Minister Netanyahu. There are talks. There seem to be talks going on with Moscow at this stage, and Ukraine has obviously said, obviously acknowledged that it's willing to do a deal on critical minerals with the US in terms of trying to sort of leverage some US support there. But sort of until we get the sit down with the two sides, we'll just have to sort of wait and see there. But Ukraine has certainly made clear that it's interested in a deal. It's willing to do it, and Russia has as well. And it's really just a matter of Trump's envoy there, who's sort of running the show. He's going to be in Ukraine, and sort of, I guess we'll just see from there how that goes. But the basic idea is Ukraine needs a security guarantee here so that Russia doesn't pause, rearm and come again. And Russia, to some extent, wants to keep hold of its gains. But yeah, we're just talking about some very, very complex, very, very fluid situations here.
Bloomberg News editor Michael Heath there. We do have more ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching in Australia. We are seeing sort of broad upside when it comes to the ASX 200, industrial. Some of the miners are showing leadership today. We're also seeing that move when it comes to the Aussie yield curve as well, narrowly steepening, just tracking their global peers as well. And we're seeing Aussie debt just falling at this point. We do have a couple of sort of eco data numbers to come through. Business confidence rising to 4 from that NAB survey for January. Conditions falling to 3. We also saw consumer sentiment they're looking pretty unchanged. So that sentiment recovery stalling on really the continued cost of living pressures and global uncertainty. And on that, the topic of global uncertainty, of course, we've been talking about President Trump ordering a 25% tariff on steel and aluminium imports. Let's bring in, for the views of sort of the broader business community, the ACCI CEO Andrew McKellar joins us now for more. Andrew, really great to have you with us. And so we have also seen the conversation that took place between Prime Minister Albanese and President Trump, the idea that perhaps we're seeing an exemption under consideration. How do you view the looming threat of trade tensions, of tariffs, and how that potentially continues to impact confidence, which, you know, in a lot of business sectors is already fragile?
Well, hello, great to be with you. Look, it's a very important question, and obviously I think we, like everybody else, we're taking this one step at a time. Things are very fluid. We're seeing that there was a conversation earlier today between Prime Minister Albanese and President Trump. Things sounded hopeful coming out of that discussion. Of course, since then, we've heard that the President has signed the executive order and that there is an across-the-board tariff to be applied on aluminium and steel. So I think there's a degree of uncertainty about what the final detail will be. Obviously, from a business point of view, our preference is that we keep those markets as open and as free as possible. There's not necessarily huge direct trade for Australia in those items. We're exporting around $400 million Australian each in steel and in aluminium. So, look, there's a direct impact. The bigger issue is what happens in the supply chain. Obviously, there's uncertainty. I think at this point, let's see the dust settle. Let's see what the final detail is. We urge, I think, the US administration to proceed with caution. But we understand that, you know, we're operating in an environment where things can change from minute to minute.
Right, in that sense that, you know, businesses are to that extent really at the mercy of diplomacy and, you know, what decisions are being made around across the other side of the world. But when it comes to what policies can do domestically, obviously we're just really kind of waiting for a date when it comes to the federal election, but we're headed to that vote. What would you like to see from the major parties when it comes to, you know, what could be considered really compelling and transformative business-oriented policies?
Look, that's very important for business, and I think what our signal to the major parties in Australia, whoever will form the next government, we do want to see a level of ambition. We understand that there are fundamental challenges that the Australian economy has to address. You know, productivity is absolutely at the top of that agenda. You know, we've made some progress on inflation. That's good. We've still got a very strong labour market. That's also very good. But if we're going to really have sustainable improvements in living standards, if we're going to get to the position where I think a lot of people aspire to be, then we've got to fundamentally, you know, address productivity. Part of that is getting the budget in order federally. We're heading back into structural deficit. To be competitive, you know, we need to look at things like tax reform. It's been a quarter of a century since anyone seriously attempted tax reform in Australia. We're talking about what President Trump is doing on tariffs now, but the next thing that he could do could be on company tax in the US. That's somewhere on his agenda. In Australia, we need to be competitive in that space again if we're going to attract investment. So those are the fundamental priorities. The other issue, if I can say, in Australia, which we're really struggling with at the moment, and that's the impact of compliance, red tape, regulation, that's having a huge impact on many businesses. You know, whether it's red tape or green tape, we're really seeing across small business and large business that that's a bigger issue than it's ever been before.
Andrew, how about the impact of the rate environment? Is there anything that businesses in Australia want to see from the Reserve Bank of Australia? We have that decision next week.
Well, it will be a critical moment. And from a small business view in particular, obviously, the sooner we can get to the position where the Reserve Bank is confident to start cutting interest rates again, then the better it will be. Will that be next week? Honestly, we don't know. It's very hard to say whether or not they are prepared to give full credit for the reductions that we've seen in inflation to date. On a superficial reading, that core inflation measurement is still just a little bit above their target band. It's heading in the right direction. A lot of progress has been made. But are they ready to make that cut? Obviously, from a business point of view, the sooner that can happen, then the better it will be.
The Australian economy, of course, heavily intertwined with how China does as well. We have seen the trade war starting to ignite, especially with more back and forth between the U.S. and China. How important is it for Australia to stay out of that? We have seen, of course, the latest problems between China and Australia as well during the first Trump administration.
Well, I think the good thing in terms of our trading relationship with China is that we've made significant progress in the past 1 to 2 years, where we've seen a range of the direct trade measures that they were applying to Australia have been lifted step by step. So that's been, I think, a positive direction in helping to restore some confidence in the direction of that relationship. But China is our largest bilateral trading partner. That's not going to change. There's been a lot of talk about diversification into different markets, into India, into the Middle East, with the US itself. Of course, if we get into a situation where the rules-based order is really going out the window, and we end up with a much more confrontational trade environment, well, that's not going to be good for anybody. Australia is at risk in those circumstances as a sort of a medium-sized open economy reliant very much on our trade partnerships. So obviously we've got a lot invested in that, and those relationships are important. We don't want to be collateral damage, in a big fight between the global giants in the trade world.
Andrew McKellar, CEO of Australian Chamber of Commerce and Industry there. And do stay tuned for another big interview out of Australia later. We'll be speaking exclusively with the CEO of biotech firm CSL. Paul McKenzie will be joining the China show to talk about today's first half profit and revenue miss, as well as the outlook, the impact of trade and ongoing geopolitical tensions. More ahead on the Asia trade. This is Bloomberg.
DeepSeek founder Liang Wenfeng could become one of the richest people in the world thanks to interest in his AI startup. Bloomberg's wealth reporter Diana Lee has more on this. How are we calculating?
Yeah, so we often say valuation is more of an art than science, and I think DeepSeek is a perfect example of that. We asked several venture capitalists and tech founders on how much DeepSeek could be worth, and their answers really ranges from $1 billion to as much as $150 billion. And it's a very wide range because different people see different potentials in DeepSeek. For example, we have somebody comparing DeepSeek with OpenAI's ChatGPT, which was valued at $300 billion. And they argue that DeepSeek could be worth at least half of that. And we also have comparables like Anthropic, which is $60 billion, and Mistral AI, like $6 billion. We also have some Chinese AI peers like Zhipu AI as well, which was valued at $3 billion. So we take all of that into consideration, and we know that the founder Liang Wenfeng holds about 84% stake in DeepSeek. If we price him on the top of the range, he could be as rich as NVIDIA's Jensen Huang.
What do we know about Liang?
Yeah, so we know that Liang and two of his college classmates, they started trading the Chinese domestic stocks since 2008. And unlike many other quantitative hedge fund funders, they don't really have many overseas or institutional trading experience. And in 2023, they started experimenting with DeepSeek with part of the R&D model of DeepSeek. Yeah, so that's
we'll have to leave it there. Our wealth reporter
Diana
Lee there. That is it for the Asia trade.